It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, soft landing. It's that time in the economic cycle where market pundits begin to speculate on whether or not the economy can digest the Fed's rate hikes and deliver a mild recession or avoid one altogether. To those believing in a steady glide path, recent data has added to their confidence. The Citi Economic Surprise Index continues to show that the economic picture is better than expected. The index has sat well above zero all year, indicating data continues to beat expectations. Recent reports have seen the ISM Services Index of business activity continue to show growth, as well as a rebound in retail sales showing consumer strength. The labor market has also been reasonably resilient. We expect lagged effects from tight monetary policy, but thus far, the real-time data has been positive. Number 2, yield curve. While the soft landing camp builds its following, we must also give a nod to history. It is likely that this time is not different. In the past 50 years, every time the yield curve has inverted, it has led to a recession. The market is expecting growth and inflation to be lower in the coming years following an aggressive Fed tightening. This is the typical path to a recession. The yield curve is the most inverted it has been in recent decades, and the inversion has lasted for 10 months. The average lead time from curve inversion to recession is 15 months, but can last over multiple years. Given this reliable indicator, we continue to ask ourselves if this time is indeed different. Number 3, The Magnificent Seven. Denzel isn't in this movie, but it has similar star power. Year to date, Apple, Amazon, Google, Nvidia, Meta, Tesla, and Microsoft have returned nearly 70%, which compares to the roughly 18% for the S&P 500. With these mega-cap stocks removed, the return would be just 8%. The winners just keep on winning. These 7 stocks have contributed to over 70% of the year-to-date performance in the index. While not always a good sign to have such narrow leadership, these stocks are widely owned, and as long as they continue to perform, we should expect the market to follow. We will be watching for weakness among these names, as well as the potential for a broadening out in participation in small and mid-cap stocks for better insight into overall risk appetite within the markets. And that's been your Market Minute for the month of September. Thanks for listening.